Hi everyone! Welcome back to Wealth for You, the channel where we simplify personal finance and investing for you. Let's talk about something that impacts every Singaporean: inflation. It's the invisible force that makes your cup of kopi cost more today than it did 10 years ago. You've probably noticed how prices of essentials like food, transportation, and housing keep rising. But here's the good news: you can fight back against inflation. Stay with me as I show you how inflation works in Singapore and how you can beat it by investing in the Singapore stock market. Hi everyone! Welcome back to Wealth for You, the channel where we simplify personal finance and investing to help you build a better future. Quick question: have you ever wondered why your favorite hawker meal feels so much more expensive than it did a few years ago? Or why saving money alone doesn't seem to be enough anymore? That's inflation at work, silently chipping away at the value of your hard-earned money. But here's the thing: inflation doesn't have to win. In this video, I'm going to share exactly how you can fight inflation and even grow your wealth by investing in Singapore's stock market. Stay with me till the end, because I'll be breaking it all down step by step in simple, practical ways. And hey, while you're here, don't forget to hit the like button, subscribe, and click the notification bell so you won't miss future videos that help you take control of your finances. Chapter 1. What is inflation? So, what exactly is inflation? It's the silent force that causes the prices of goods and services to rise over time. In simple terms, inflation means that the same dollar today buys you less than it did yesterday. And in Singapore, inflation isn't just a textbook concept. It's something we encounter in our daily lives. Think about it. That plate of chicken rice you used to enjoy for $3? These days, it's not uncommon to pay $5 or even $6 depending on where you go. And let's not forget public transport. A bus ride that once cost just 70 cents now sets you back closer to $1.50. It doesn't stop there. Groceries at your local NTUC fair price, a cup of kopi from your favorite coffee shop, even utility bills, they've all crept up in price. Yet, for many of us, our salaries haven't grown at the same pace. Inflation is unavoidable, but here's the silver lining: you can manage it. The key lies in understanding how inflation works and making smart financial moves to ensure your purchasing power doesn't shrink over time. Do you remember how much you used to pay for your favorite hawker meal 5 or 10 years ago? Let me know in the comments. I'd love to hear your experiences and how. Chapter 2. How inflation affects your wealth. Now let's get to why inflation can be so dangerous for your wealth. The harsh truth is this: if your savings or income doesn't grow faster than inflation, you're essentially losing money without even realizing it. Imagine this scenario. You've saved $10,000 in a regular savings account earning less than 1% interest annually. At first, it feels great seeing your money grow, even if just a little. But here's the catch: inflation in Singapore averages around 2 to 3% per year. What does this mean? It means the cost of living rises faster than your money grows. That $10,000 might be enough to cover certain expenses today, but in 10 years, it could lose a significant chunk of its purchasing power. You're not just standing still, you're moving backward financially. This is why relying solely on saving isn't enough. Inflation silently chips away at the value of your hard-earned money. And if we don't take steps to counteract it, we're left playing catch-up in a game where the stakes only get higher. But don't worry, you're not alone in this fight, and there is a way to fight back. By making your money work harder through investing, you can outpace inflation and even grow your wealth in the long run. Have you ever noticed how the things you used to afford comfortably now seem more expensive, even if your salary has increased? How do you plan to grow your money to keep up? Share your thoughts in the comments. Let's discuss. Chapter 3. How to beat inflation. Beating inflation isn't just about saving more. It's about making your money work smarter for you. And one of the most effective ways to do that is by investing in the Singapore stock market. Now, before you think, but isn't the stock market risky? Let's clear that up. Investing is not the same as gambling. It's not about making wild guesses or chasing quick profits. Instead, it's about growing your wealth steadily and strategically over time by putting your money into strong, reliable companies and assets. Why the Singapore stock market? Well, Singapore is home to many established companies with resilient business models. From REITs, real estate investment trusts, that generate rental income to consumer companies with steady cash flow. These businesses tend to perform well even during inflationary periods, and they often pass on their earnings to shareholders in the form of dividends. The best part? Dividend-paying stocks offer a dual benefit. You earn regular cash payouts, and you also enjoy potential capital growth as the companies expand and thrive. Over time, the returns from these investments can far outpace inflation, helping you not just protect, but also grow your purchasing power. What's your biggest concern about investing? Is it the risk, the lack of knowledge, or just not knowing where to start? Drop a comment below. I'd love to hear what's holding you back and help you overcome it. Chapter 4. Why the Singapore stock market? So, why should you consider the Singapore stock market when looking to beat inflation? Well, it offers unique opportunities that can help you not just stay ahead, but thrive during inflationary times. Let's dive into two powerful types of investments: dividend stocks and REITs, or real estate investment trusts. Dividend stocks. These are shares of companies that share their profits directly with you, the investor, in the form of dividends. It's like getting rewarded just for owning a piece of the business. Over time, as these companies grow and their profits increase, so do your dividends. That means steady income that keeps up with inflation and potentially outpaces it. REITs. Imagine being able to invest in large properties like shopping malls, office buildings, or even hospitals without having to buy them outright. That's what REITs allow you to do. They pool money from investors to purchase and manage income-generating properties. As a shareholder, you earn a portion of the rental income without tying up all your capital in property. REITs can be an excellent way to stay liquid while still earning passive income. Both of these investment options give you a chance to grow your wealth and generate passive income, which is key to outpacing inflation. With steady returns from dividends and REITs, you can build a reliable stream of income over time, just by being a shareholder. Chapter 5. The Power of Compounding. Now, let's talk about the true magic of investing. Compounding. This is where your money really starts working for you. Here's how it works. When you reinvest the dividends you earn, you're essentially allowing your earnings to generate even more earnings. It's like a snowball rolling downhill, getting bigger and bigger over time. Let's break it down with an example. Imagine you invest $10,000 today and earn 5% annually in dividends. If you reinvest those dividends instead of cashing them out, your money continues to grow exponentially. Year after year, your returns are based on a larger amount because you're earning dividends on both your original investment and the dividends you've already received. Over time, this compounding effect allows your wealth to outpace inflation, building momentum as you go. The beauty of compounding is that it's a long-term strategy. The longer you invest, the more powerful it becomes. It's not just about keeping up with inflation anymore. You're actively beating it and building wealth for the future. If you're new to investing, I totally get that it can feel intimidating at first. But here's the truth. Everyone starts somewhere. You don't have to be a financial expert to begin. The key is to start small and gradually learn as you go. Remember, the most important step is simply taking action. You don't need to wait for the perfect time or perfect knowledge. Every journey to financial growth begins with one step. Even if you start with a small amount, It's the habit of investing and learning that will help you grow. And let me tell you, inflation doesn't have to be your enemy. You have the power to take control of your financial future. By making smart investments and letting time work its magic, you can not only protect yourself from inflation, but you can thrive despite it. So, what are you waiting for? Start today. And remember, the earlier you begin, the more time you give yourself to grow. You've got this. What's holding you back from starting to invest? Let me know in the comments. Let's talk about it and get you on the right track. Conclusion. Here's what we covered today. 1. Inflation is a real challenge, but it's not something we can't overcome. 2. By investing in the Singapore stock market, especially in dividend stocks and REITs, you can make your money work harder for you and build a passive income stream. 3. Don't forget the power of compounding. Reinvesting your dividends allows your wealth to grow exponentially, helping you stay ahead of inflation. If you found today's video helpful, please give it a thumbs up and hit that subscribe button to support the channel. And let's make this a two-way conversation. What are your thoughts on investing? Are you ready to start, or do you have questions on how to get started? Drop a comment below. I'd love to help. Thanks for watching Wealth for You. Let's beat inflation and grow our wealth together. See you in the next video.